What is common between Tata Chorus, Flipkart Myntra, Thomas Cook Sterling Holidays? You guessed it right. These are some of the major mergers and acquisitions in the recent past in India. But the common thread is that such mergers are enabled by investment banks. Welcome to this module on Introduction to Investment Banking. Let's say a big telecom operator wants to sell its bonds worth of several crores to invest in its venture in Asia and Africa. A major e-commerce retailer in the country wishes to raise a capital through an initial public offering. A Indian steel major is looking to merge its business with an European steel manufacturer. Did you know that there are entities that act as catalysts and the brain behind these big transactions? These are precisely the services offered by an investment bank. An investment bank is a financial intermediary that performs a variety of services. They specialize in large and complex financial transactions such as underwriting, that involves packaging and selling securities on behalf of a client. Acting as an intermediary between a securities issuer and the investing public. Facilitating mergers and acquisitions and other corporate reorganizations. Acting as a broker and financial advisor for institutional clients. Let's say an organization wants to raise capital for its project. It approaches an investment bank to price its new shares. The investment bank underwrites the offering by guaranteeing that the organization receives its proceeds at the established value. The investment bank uses its sales force to mobilize buyers and institutional investors to buy chunks of the shares. The bank facilitates buying and selling of the new shares out of their own account. Thereby, they create a market for the organization's offering. Investment banking is a specific division of banking related to the creation of capital for other companies. Investment banks underwrite new debt and equity securities for all types of corporations. Investment banks also provide guidance to issuers regarding the issue and placement of stock. Let's look at the other financial services that include investment banking as their offering. Universal banking refers to the combination of commercial banking and investment banking that includes the securities business. This bank includes investment services in addition to services related to savings and loans. Another type of bank offering investment services is the merchant bank. Merchant banks deal mostly in international finance, long-term loans for companies and underwriting. Merchant banks do not provide regular banking services to the general public. The knowledge of merchant banks and international finances makes them specialists in dealing with multinational corporations. Let's now look at the core business portfolio of investment banks. It includes merchant banking services that deal with capital creation, international finance, management of public offer of debt or equity for corporates, advisory and transaction services that deal with mergers and acquisition, capital restructuring, arranging long-term finances, and managing complex financial deals. Underwriting that deals with risk-taking and ensuring the success of public issue of debt or equity of a firm. Market making that deals with providing quotes for buying and selling of the same stock simultaneously to ensure liquidity in the market. Bought out deals that is concerned with buying all the securities of a firm with a commitment to resell to public or institutions later. Investment in primary market that deals with primary market activities. The support activity portfolios of an investment bank include services such as secondary market services, support services, venture capital, private equity, asset management and proprietary trading and dealing in securities. Secondary market services include stockbroking, derivative products and portfolio management. Support services include sales and distribution, equity research and investment advisory and corporate research and information services. Venture capital provides seed finance for startup firms. Private equity deals with trading in equities that are not listed on any exchange. Asset management deals with managing funds or assets of other firms, for instance, an insurance firm. Proprietary trading, which deals with trading on behalf of a firm by using the funds of the firm. So far we explored all the portfolios and support areas of investment banks. These areas are served through various departments of investment banks. The different departments are Corporate Finance Department, which assists corporates in raising capital to finance their operations and expansion plans. Derivatives Department that helps in easing the price and market risk for corporates. Mergers and Acquisition Department that provides advisory to companies looking for potential acquisition or trying to reduce their stake. Private Client Services Department that helps corporates and high net worth individuals in managing their financial portfolios. Public Finance Department that deals with securities issued by governments. Retail Department that buys and sells securities on behalf of small individual clients. Sales and Trading Department that trades in primary and secondary markets in various securities on behalf of institutional clients. Sales and Trading Structured Finance Department that specializes in creating securities based on other assets to redistribute cash flows and diversifying portfolio risk of clients.